over the last 3 to 4 years, I've seen way more aggressive debt terms. They'll shorten their due diligence period. They'll put up hard money on day one of the contract.
What? Who put? Pause. Hard money day one of the contract.
Yeah.
Welcome back to episode 17 of How to Invest in Commercial Real Estate. My name is Braden, and we have a special guest, Brandon Lamb, on for part 2. And today, we're really going to drive down on, maybe some brokerage tips, how we can expand on people who are brokering, maybe get them some bigger deals, or just help them out. And then, maybe some tips on how somebody could break into multifamily for the first time. So, Brian and I, when we formed Criterion a couple of years ago, we've been focusing on other asset classes, and, multifamily is one that I think everyone wants to get into. But how do you do it? Where do you even start? So let's go back to the first one, brokerage tips. What's the biggest piece of value that you think you could give somebody to blow up their brokerage business?
Yeah, again, back to when I got started, again, I knew no one, didn't know much about, the Oklahoma landscape at all. But, I knew it was a relationship business, and it very much is. So I think that's really critical. Number one is just build relationships, take people to coffee, lunch, whatever you can do to get in the door. A lot of these guys get called on a lot, as you can imagine. So it's not easy. Everyone would be doing it if it was. But, it's a relationship business. And number two, I'm a big believer in specialization and building a team. For me, that was critical that I do that. Back in the day when I was selling securities, I was kind of a one-man show, and I hated that. I've always been into team sports. That's just kind of my, how I'm wired, and this is very much the same. And like I said, we have role players that are incredible at what they do. I think our guys are, the best at what they do in their respective lanes. And I'm biased, of course, but, that's really critical. It's relationships. It's building systems every day. You're doing things that are going to drive you to the goal, and, build a team, find some subject matter experts that are better than you, smarter than you in that respective lane.
I love that.
And, get a team together.
Taking a step back. So what if someone's in a completely different industry and they want to get into the brokerage industry? It sounds interesting to them. Do they have to have some sort of certification beforehand, or some sort of formal training, or can they just maybe interview at a company that's doing brokering and just work their way up, or learn by joining that company? Or how do you recommend that someone get started like that?
Yeah, I mean, that's a great question. And when I was trying to get into the business, I was really, I had decided I wanted to be in this business long before I actually did. So I was studying, I was reading books, I was, working on my CCIM, for example, just in my spare time.
What's a CCIM?
That's a Certified Commercial Investment Member. So it's a great credential to have. It really kind of gives you exposure to every food group, in the industry. And it's,
How long does that take to get?
It depends. You can kind of go at your own pace. I powered through it in, inside of 3 years, 4 segments. But, I highly recommend it for anybody who's really not well-versed in the business, but
powered through it for 3 years.
Yeah,
I love
absolutely. That. I mean, I think it's taken some people 5 to 7, but it's really kind of at your own pace.
Yeah, but how many people power through anything for 3 years?
Yeah.
That's just a rare statement in and of itself. Yeah, man, last 3 years was rough. I really had to push through that one.
What? It's 4 or 5 courses, and then the summary? Or the comprehensive exam?
Yeah, the final. You go to Chicago and take the final, and that's really it. So that was years ago when I did that. But
does someone have to have their CCIM to break in?
Not at all. Not at all. Most people don't. So no, I mean, you don't have to do that. It's just, if you're in a completely different industry, you know nothing about real estate or finance or anything like that, and you say, I want a new career path. That's a great way to go.
Good way to learn.
Gives you great exposure to to kind of the all the topics that are typically important. Right. So.
How many of your analysts or analysts you've worked with have their real estate license versus analysts or underwriters on teams like yourself that don't have real estate licenses? And it's kind of a leading question because I'm a firm believer in people who want to learn should get in as an analyst job and then do the brokerage license after.
Yeah, absolutely. That's how I started. At Stan Johnson as an analyst, just to learn the business, and that was a great lead in. Everybody wants to be a broker on day one, and you really can't, in my opinion, you can't be a really good advisor to your clients unless you really understand, from their perspective.
What does an analyst do at a brokerage firm?
Well, they underwrite all of our deals. So they really get into the weeds
all the numbers
on all the numbers. Yeah, they understand financial statements and they can take a trailing 12 financial statement and dissect it and,
it seems like a good way to learn.
It is. It's a great way to learn, great way to start. And most of the successful brokers I know really started in that capacity.
Okay.
It'd be good to start as an analyst to learn what we're doing on the syndication side too. I mean, just understanding the numbers and improving your financial education. That's really where the game's played and where the money's made.
Right.
Yeah, and just like you said earlier, like you knew this was something you wanted to be into, so you started educating yourself. You started working on your CCIM part time, and you started side hustling it with knowledge. And we talk about that in previous episodes all the time. If you want to break in, listen to the podcast, listen to somebody else's podcast, read a book about it, talk to people like yourself, get into CCIM.
Going back to his point on you were building a team, there's a lot of, I would say, brokers that try to go it alone. I don't want to split my commission. I want the whole thing. And they really trip themselves up for, in the short term, taking a little more cut on the commission, getting it all themselves, instead of sharing it with other professionals. I think it limits their growth. And you see them where they'll stagnate in their career and they're doing one-off deals. But the power teams that are assembled, they're sharing commission, but they're doing 10 times the business for a third of the commission. So you're making way more. And also just having if someone was going to break in, I would say break in at the biggest company, like a Newmark, because you're going to have the best systems, you're going to have the best training and the most experience. Where if you join a local, smaller team with only a person, you're not going to get the training and the experience that you would with a bigger shop.
Agree. Yeah. I mean, and everyone's wired differently, of course. I mean, some people like to be the lone wolf and go get it, and they're happy if they get 2 or 3 listings a year and they can make a great living doing that, for sure. But, we were of the opinion of, hey, let's amass our talents together. Let's everyone get a lane. Like you said, niche down even further and say, I'm going to specialize not just in multifamily, but I'm going to work on Tulsa institutional Class A and B stuff north of $10 million. So we really kind of get down at that level. But, again, everyone's wired differently. We just wanted to get more market share. We figured that, deals are going to beget deals, and that's the truth. One listing leads to more listings. And that's typically the way it works.
Business, man. I mean, it really does work that way.
That's right.
So how do you suggest that someone just like us, if we want to go out, or our listeners want to go out and buy a multifamily property, how do they get started? They contact someone like you, or how do you think they should get started?
Yeah, I mean, brokers obviously are a great way to start making those connections if you want to be a buyer. Again, 10 years ago, I thought that's what I want to do, so I started calling brokers and making those relationships. And brokers get a lot of calls, as you can imagine. So everybody who says, hey, I want to buy multifamily, I've bought nothing, I don't have any of my own money. It's like, well, we probably are, going to not make that a top priority to call that buyer. But, the guys that are persistent, the guys that really show that, they mean business. One of the fastest growing companies in Oklahoma right now is Vesta. And 3 years ago, that was the phone call that I got from that principal. It was just, hey, I don't own anything, but I want to buy this deal. I thought, well, all right, let's see how that goes. And man, he's bought 18 deals, I think, since then.
Wow.
So yeah, phenomenal guy, incredible at raising capital. And it happens. So I think my biggest suggestion for the guys that really want to get into the business and break in, don't be afraid of the, 50 unit deals, 30 unit deals. I think it's a great way to learn. You're not going to get rich on that, most likely. I mean, Joel, you can speak to that, obviously, I think better than anybody, because you started with some of those that we thought, well, it's the ugly deal. It's the small deal that doesn't really have a lot of sex appeal. But man, what a great launch pad for what's a successful company today. And there's less competition in that space. So if you're trying to go after the 10 million plus deal, everybody wants those. Everybody wants to own those. But there's a lot of competition up there at that level. And less than 5 million, that private client space, get a better odds.
So it's going to have to be maybe properties with less units, or maybe Class C properties that need to be fixed up.
Yeah,
Something like that.
sure.
Less competition there.
Yeah,
for the money.
absolutely. You can buy those right, add value, and 1031 later.
That's interesting. We did have to start with some of the uglier, older, smaller units. I didn't feel like I had a choice. What I didn't do a good job is of talking to the brokers, because I was like that buyer that didn't know anything and didn't have any money, and so I didn't really want to expose myself and look like an idiot to the brokers. But I didn't do enough of asking them, hey, how does the underwriting work? And so it led me to making mistakes. So I think if you want to get it into the game, having conversations with brokers, getting their underwriting, looking at how they analyze the deal will help you, keep you from making mistakes. But the question of whether you should buy a 50 unit or a 200 unit, it really comes down to whether you can raise capital. Right. And what kind of returns that capital wants.
100%.
If you've studied and you are confident and you know the stuff, and you can present a business plan that makes your investors double-digit cash-on-cash returns, and they're willing to trust you, and maybe you have a broker kind of back, and you saying, yeah, this deal will make that money, then by all means, I say skip to the bigger units and do it that way. But if you can, or you don't have the ability to raise the money, 50 unit. 100 unit or an older asset class could be a way to break in.
So I've got a really good question. You said earlier that you guys get so many offers on deals, 15 to 30, 40, maybe depending on the deal in the market. Are they getting smarter? Are the people who are constantly bidding on these deals, are they learning? Are they taking notes? Are they winning deals later on? Do they keep submitting letters of intent with you, or do they pass on? Tell me a little bit about the bidders bidding and how long you keep that relationship going. Maybe tell me about some of the deals they lost as well, but they kept going. Because I know Joel and Vic over at Precision Equity, they've been bidding on multifamily deals. I mean, the guys out there buying are typically out there bidding 10 times more than they're buying.
Yeah, no, that's true. We've had buyers or prospective buyers who've been making bids and offers for years and have never bought anything. And sometimes they fall away, but we're really good at vetting those tire kickers. We inevitably have those on every single deal. But the guys, I think, it helps guys to lose a deal every now and then, because they want to know, the guys that really are serious about it, they want to follow up and say, where did we miss it? Obviously, where did it trade? Does that pencil for us in terms of, our return to our investors? Sometimes yes, sometimes no. But yeah, typically, the guys that really ultimately win, they're taking several swings before they actually win a deal.
Yeah, and they're calling you afterwards, like you said.
That's right. Yeah.
I mean, how valuable is that phone conversation? When you bid on a deal, you lose, you call the broker afterwards, and he just says, hey, this is where it traded. As a principal, as a buyer, if I could have made that number work, I'm kicking myself so hard. I'm like, man, I could have got there. I could have bid higher. I was just scared or whatever it was. When it doesn't work, that's when you can go to sleep good at night, because it's like, oh man, that idiot, that's never going to work.
Right. Yeah.
I've got another question that I think is interesting. So, obviously I'm underwriting and bidding on even some of your deals, and I don't win them. And part of that's just a risk analysis on our part and what return we're willing to live with for that risk. But so we have buyers that are paying prices where I'm penciling it in and it's just not working. Maybe it's 6% cash on cash or something. I know the pro forma may be higher, but I don't really think they're going to walk away with that much when you add in CapEx and some of those expenses. So do you have any, without giving names or any information, do you have any thoughts on these guys that are winning a lot of deals at really low caps, and how they're performing after they buy it? And are they really doing as well as they thought they were going to do, or is there any variance there?
Yeah, I mean, there's certainly a variance. And again, every investor has their own model. They have their own metrics in terms of here's what I'm paying and my investors for a pref, and here's what we're obviously trying to get on the backside once we exit the deal. And every investor profile is different. The larger institutional guys, it's hard to compete with those guys on a Class A deal because they don't have to pay a big preferred return to their investors. So yeah, I mean, everyone's different. So we've seen in Oklahoma predominantly guys that have bought at X and they sell at Y and they've done well. And everyone's definition of we did well is different, of course. So a lot of guys are just happy with that coupon basically, and and we clip the coupon, we're it's perceived safety for that particular asset class. We're not taking a lot of risk, and we're happy at the end of the day.
Is there anything else that can make a buyer stand out? Does it really just come down to the price at the end of the day, or as a broker, is there something else a buyer can do to stand out and increase his chances of winning a bid?
Yeah, absolutely. I mean, most sellers obviously are very price sensitive, but at the same time, over the last 3 to 4 years, I've seen way more aggressive debt terms. They'll shorten their due diligence period. They'll put up hard money on day one of the contract.
What? Who put? Pause. Hard money day one of the contract.
Yeah.
I guess when you buy Class A brand new construction stuff, you can do that.
That's market now, basically.
That's market.
And 3 years ago, I would have said there, not many people in Oklahoma do that.
That's why I don't buy multifamily.
That is market.
Wow.
Yeah.
I can we just take a moment of silence for that? I don't even know what to say after this.
I would consider it on a Class A deal or a newer deal that would have less hidden problems.
Right. Yeah.
And I would do it with an operator and a broker that I trust. That they're going to give me the right financials, and there's no hidden things in the closet. So
yeah. Well, that's a good point too. I mean, Class A deals, we see it way more often. If it's a workforce housing deal that's got some hair on it, there might be hard money, but it's going to be far less. Just something to show that, hey, I've got skin in the game. I'm serious about this. I'm not going to walk away from this money.
I'm not wasting your time.
That's right.
Some guys do just completely waste your time.
Absolutely.
That's another reason to use a broker, is because, if Braden and I are out there trying to buy a property, we don't know that this is the new norm, that you have hard money on day one of the contract and these type of things. So we're not going to know the latest things that attract a buyer. So
right.
That's another reason, I think, to use a broker.
Yeah,
know those things.
I think we do a good job of coaching people through that, because we want people to be successful and win deals. So, that's how we make our living too. We want people to actually buy the deal. So we want it to be competitive. Our fiduciary obligation to our clients is, hey, we're going to get you, we're going to get you the biggest price that's available in the market, because we're going to bring a lot of new blood to the market that you don't even know about. Those guys that are trying to enter into the market for the first time are typically the ones that are paying up a bit to get the deal. And, but yeah, we want it to be ultra competitive. We want to create that competitive bidding environment so that people are getting, those competitive juices start flowing, and inevitably that price goes higher. So sellers really like us. Buyers sometimes get really mad at us.
I don't love you, Brandon, because I don't get any deals. But I got a question that may kind of wrap us up here.
Sure. Yeah.
Obviously, a rising tide lifts all boats, and we've seen a run in multifamily almost 12 years now, since 08. Maybe it started in 09 and 2010 as we were rebounding. But so what is the outlook? When do we see prices either stabilize or come back down?
Get out the crystal ball.
Yeah, that's I love those questions. Yeah, I mean, obviously we, for the last several years, we've thought to ourselves, man, is this sustainable? It's just getting, more and more aggressive, more and more competitive. No one saw a pandemic coming, obviously. We wondered back in March, how is this going to play out? And it just keeps getting crazier. But, again, I think as long as interest rates stay somewhat stable, I think that you're going to continue to see buyers flooding into these markets. Secondary, tertiary markets are now in vogue. Before it was, a little bit more of a limited buyer pool for, call it the tertiary markets. And now it's like, well, that's perceived safety, because middle America is getting a little more crowded these days.
I think the pandemic just gave it another leg up, maybe because
I think
people,
you're right.
I know before the pandemic, Braden and I were all over retail. It was great. I don't know if everybody felt like that, but now during the pandemic, everybody on retail is maybe kind of holding in a little bit, and they say, well, we got to place our money somewhere, and multifamily is obviously another good place.
Yeah, multifamily and industrial seem to still be the darlings of commercial real estate right now.
Yeah.
And and to your earlier point, Joel, again, I mean, we've seen this phenomenon of, buyers who were predominantly non-multifamily buyers are now multifamily buyers. So it's just making that landscape even more competitive.
Yeah.
I think the returns could be skinny going forward, and we may have some correction, but as long as interest rates stay low, which I think globally, the way money works now, they're not going to go back up to where they used to be in the past. They may come up a little bit, but then you've got the government flooding the market with money, trillions of dollars, and so that will raise inflation over time.
And the pause they put on purchasing.
Yeah.
That money was just sitting on the sideline for months.
I think that'll help as the dollar kind of devalues. That's going to push prices up as well. So
Agreed.
Anyway, very interesting.
Well, episode 17, I thought that was great. Brokerage tips, how to break into multifamily. Make sure to like and subscribe, turn on
Brandon,
notifications.
Yeah, thanks, Brandon.
Yeah, thanks for having me, guys.
Absolutely. Appreciate it, man.